Hello and welcome back to our discussion on auditing the purchasing process. In this video lecture, we are actually going to talk about control activities and test of controls. Remember, this is an integrated audit. And in an integrated audit, we not only audit the financial statements, but we also audit internal controls. So let's talk about the management assertions that we have here. So these are our management assertions: occurrence, completeness, authorization, accuracy, cutoff, and classification. And then what we have in the darker green here is the type of transactions that can happen. So for occurrence, we want to make sure that it did occur and that it relates to the entity that we are auditing. Additionally, for completeness, we want to make sure that everything that should be completed is actually in our records. For authorization, we want to make sure every single one is authorized. Every single transaction. Accuracy, we want to make sure that they are recorded correctly. Cutoff, in this case, we're going to talk about later the last 5 and the first 5 invoices. And then we're going to talk about classification. So here, we're back to the same management assertions. And what we're doing here is we're looking at the actual test of control. So for occurrence, we are actually going to observe and evaluate, mostly segregation of duties. We understand that that is one of our largest test of controls, and basically segregation of duties is one of the easiest controls that we can do. For completeness, we are actually going to make sure that everything that is numerically sequenced is properly sequenced, and that we're going to talk about the last 5 and the first 5. Then for authorization, make sure all the POs are authorized, make sure the checks are signed by who they need to be, and accuracy, cutoff, last 5, first 5, and classifications. So here we're talking about occurrence, and here what we're concerned about, as always, is material misstatement, right? And here this is basically because we want to make sure that every cash disbursement is recorded and that no payment is made when it shouldn't be. So we want to make sure we're taking advantage of discounts. So several things that we look at here as auditors is obviously segregation of duties, one of our favorites, reconciliation and review of vendor statements. Now this is critical. We want to make sure that the company is actually receiving vendor statements and someone in AP is actually reconciling, right? To receive a statement is great, but you have to reconcile that statement to make sure that the vendor statement equals what's on our general ledger. And then bank reconciliations, they're usually done monthly, but most organizations handle bank cash recs every day just to make sure that there's enough working capital needs. Now for completeness of the transactions, here the biggest concern is that, cash disbursements were made, but then they're not recorded, right? And that would be an issue. So how did cash get out of the company without the proper channels? So what we're doing when we're testing these types of controls is basically we're looking to make sure the numerical sequence of checks are there, and that basically we're reconciling the daily cash disbursements. And this is like a cash disbursements report that you can get from any accounting information systems, usually in the AP module. And you want to make sure that everything is there. And then also the other piece we want to make sure is that AP, which is a control account, that it matches to our AP subledger. Right, so we want to make sure that our GL and our subledger equal. And then if that's the case, we as auditors are pretty happy about that. Then when we're talking about authorization, again, segregation of duties is critical here, and we want to make sure that whoever's receiving the checks isn't recording the checks, and whoever approves the purchases, that they don't actually get to issue the cash disbursement. Then when we're talking about accuracy, another major concern for us is that everything is recorded properly, right? We don't want any errors. And sometimes a big key error would be the checks and the EFT. Remember EFT, electronic funds transfer, right? We want to make sure that that is done every day. So basically whatever you're getting from the bank, that it is recorded in your books and it's recorded accurately. For cutoff, this is one of my first and favorite tests that I love doing as an auditor, because here not only are you checking that the journal, which is the GL, ties out to the subledger, but you're making sure that anything before and after year end. And so this is where the last 5 and the first 5 make a big difference, right? So here the last 5 disbursements are tested to make sure they're recorded in the proper period, and then the first 5 invoices that come in are tested to make sure they're also in the proper period. Then we have control activities that relate to the classification. So here we're mainly looking at the general ledger account to make sure everything is correct. And we're also looking at the chart of accounts. And in this chart of accounts, we're making sure that every disbursement is recorded to the correct expense account and that everything is recorded properly. And it does have the voucher, which in our case mostly would be a PO system. Now, when you're actually testing returns, right, now this could be an issue, right, because you purchase items and then you might return them, but as an auditor, we have to consider its materiality, right? So normally we don't really deal with a lot of purchase returns as an audit function because it isn't material. What we tend to do is we do substantive analytical procedures and we test for reasonableness. So as we did for, let's say, AP, right, when we're looking at the beginning balance, and then we're adding to it our purchases, and then what actually is a debit to AP is our cash disbursements to get our ending balance. Then when we're testing for our purchases, right, when we're actually looking for this account here, and we're testing for our purchases, we have our beginning balance, and then we have our additions, and then here we're going to remove our returns. So this is a significantly small balance, so we normally don't test it, but at least you know how it relates in the T accounts, and if it does become material, you'll know what to do to test it. So now we're looking at control risk. So after we do all these tests of control, we want to make sure that it kind of follows within our planned level of control risk, because depending on that level is where we're going to have to do those substantiative procedures, right? If what we end up, if those results do not coincide, then we may have to reduce the level of detection risk, and then we might have to increase our substantiative procedures in more than what we had thought about. So all of these control tests are pretty critical to make sure that we're actually doing the level of work that we need to do for the level of risk that's assessed. And that's the end of our video lecture.